Hello, friends. This is Prasenjit Mukherjee from myplexus.com. I'm thrilled to begin a new chapter in the myplexus.com journey with Fund Se Fayda with Nippon India Mutual Fund. This is where we attempt to simplify investment concepts on various topics to help make investments simpler and ultimately much more rewarding. To begin with, I'm glad to start a series on the passive on the index funds and by extension the passive investing universe. And in our program, it will be our endeavor to find out the reasons for such funds, the inspiration for the category, and much more importantly, whether this category track record merits our attention and much more importantly, our money. To hold forth on the subject, it is indeed an honor for me to host two professionals to have with us Mr. Samir Desai and Ms. Anamika Mattey of Nippon India Mutual Fund. Samir comes with a passion for index funds that is difficult to find anywhere else. And this passion has very deep roots in the professional history that he has. Anamika is the consummate marketing professional and she has handled practically every vertical in the mutual fund space. And I'm sure interacting with them will provide very definitive insights. To start off, hi Samir.
Hi, Prasoon.
Samir, you are a veteran of the passive world. You have got years of experience with benchmark, and I'm sure my audience is very keen to have your insights on this. It's an honor and a pleasure to have you on Fund Se Fayda by myplexus.com. Now, Samir, trust you and your family members are keeping fine and taking every precaution. But starting off, can you explain to us and to our audience in a little detail what exactly are index funds?
Thank you, Prasoon, for having me on your show. I'd like to give the audience a sense of, the importance of index investing by quoting the Nobel laureate Dr. Paul Samuelson, who said in the late 1970s at the launch of the first ever index mutual fund scheme that it is an invention as important as the invention of the wheel, alphabet, and the Gutenberg printing press. So, as the name suggests, an index fund tries to match the return of the underlying index, whatever it is. Okay. It makes no attempt to outperform the index. So, if I use an analogy, if outperforming the index is the equivalent of gold medal, underperforming the index is the equivalent of bronze medal, then an index fund investor is at the silver medal position by default. So he gives away the hope for outperformance or gold medal, but he's hedged against underperformance or the bronze medal position. And believe you me, the silver medal position in India for the longest time has been good enough to beat inflation, which is the primary objective of index investing.
Oh, that's a wonderful explanation, Samir. Thanks very much. But I have a clarification. Index investing, as you say, is passive, but the index itself is a very active animal. So, how does replicating a very active animal passive at all?
You're right, Prasoon. Actually, the term passive is a bit misleading. The index portfolio at any given point in time matches the weights of the index, or it is a mirror image of the index. So the index fund investor is always, holds the contemporary portfolio because the underlying index is dynamic in terms of weightages. So he holds this contemporary portfolio at a very low cost.
I see. Thanks, Amir. Coming to Anamika. Anamika, you have had tons of experience with mutual fund distributors across geographies and across a business scale. How well do you think this kind of a product sits in with the advisor's portfolio? And in a little bit detailed, how does he go about? How does he or she go about constructing it?
So, hi Prasoon, thank you for having me on the show. To start with your question, as Samir mentioned, the silver medal. So, what the passive funds do is give you an exposure to the broader markets and eliminate the risk of stock selection, which is involved in the actively managed funds. Now, an advisor can, depending on the investor risk profile, and allocate between the passive and the active funds because as you know, Samir gave the example that the index funds will at least give you the return of the market. And advisors can consider there's a whole lot of diversification which is possible within the index fund space as well. So it could be across market caps, it can be across sectors, it is in there, it allows you even in international exposure as well as gold. So a partner can allocate across the different diversified space via the passive category also to their investors.
Yeah, that's very simplifying. So essentially, what you're saying is that as per the category desired by the distributor stroke advisor, the solution could come from the passive schemes themselves.
Right.
Okay,
Absolutely.
but Anamika, give me an idea of the size. How, I mean, we have been hearing this index-based investing in passives for the last 4 5 months very actively. But what about the size in an Indian perspective and, of course, in a global context?
That's a good one. So in India, while we have about 150 passive schemes, which includes the gold ETF, index ETFs, etc., and totaling almost about 3 lakh crores of assets. So passive, therefore, is looks very, it's still small in the overall scheme of things, less than 10% of the industry AUM as of today. However, it has been growing pretty steadily. In fact, if you look at the equity assets, passives would be nearly 26% of the overall equity assets that we have. The shift that we see in passive is obviously a global phenomenon, and it started in the developed economies. If I were to give you a perspective, the contribution in US of passive grew from almost 14% in 2005 to nearly 41% in as of March 2020. I'm sure it will be much higher today. Interestingly, the world's largest mutual fund, which to touch 1 trillion USD, is an index fund, which is the Vanguard Total Stock Market Index. And hopefully, we would have a $1 trillion index fund of our own soon too.
Insha Ganesh, that day will
Industry,
come
yeah,
also.
yeah.
Insha Ganesh, that day will come also soon. So, friends, there you have it from two experts. To sum it up, the index world is something which is assured to give you not the gold all the time, but you are much more surer of guaranteeing silver. So, over the long term, you will have a much better chance of attaining gold, which is your investments has a much better chance of doing the maximum returns. Second is this is something which sets in very well with the distributor's portfolio, with the advisor's portfolio, because A, it is much more easier to choose schemes depending upon the preferred category that the advisor has, and thereby take it to the customers and investors for maximizing or perhaps in the near term optimizing returns on investments. So this is a segment which is growing to global scales very fast in India. And as Anamika just mentioned, it covers practically 26% of the equity space and rising very fast, I will presume. Now, we are doing this series and we will be continuing with this for a lot more sessions, and we will definitely try and pick up products and its applicability for the advisors stroke distributors to make maximum difference to their business. Stay focused on to this, and we will be soon catching up with you again. Thank you all very much. It was lovely having you.
Thank you. Thank you, Prasun.
Thank you, Prasoon.